I'm Donald Leggett, and welcome to the latest London South East CEO interview. I'm joined today by Carl Esprey, Executive Director at Contango Holdings. He's here to discuss the readmission of Contango to the LEC main market and to give an update on their strategy. Welcome, Carl.
Thank you very much. Hello, Donald.
And first question, if you could sum up Contango Holdings for us and the reverse takeover of the Zimbabwe coal asset.
Yes, of course. Thank you very much. So Contango Holdings was a shell that was set up 2.5 years ago to look for a near-term production asset, really not looking at an exploration asset, looking at something that could be developed and turned into cash flow in short order. We identified an asset in Zimbabwe that we particularly liked, but it was an exploration license, and we then tasked the vendor to change the license into a mining license, which is part of the reason why the time in between has been so long. That's all been changed into a mining license, and so we've recently closed on the transaction to purchase the mining license on the coal asset in Zimbabwe, which will allow us to start construction of the mine soon and really move very quickly towards first cash flow.
Okay, because you're talking about moving quite quickly, but in essence, you actually in reality moved quite slowly. Is that the story behind the readmission to the London Stock Exchange main market?
Yes, I mean there was operational reason for some of the time, and obviously some other more legal reasons, having to go through a lot of due diligence around tenure, specifically around the mining license and the length of the mining license. But the main reason was that we didn't want an exploration license and then to take the legal risk of the change to mining license. So we now have a full mining license with a 20-year tenure on the whole deposit.
Okay. And let's dig into the background of Contango. For those unfamiliar with Contango, who holds the shares? Where does the money come from, essentially?
So Contango was already a listed shell, and obviously there's the first block of shareholders are the people that set up the company and set up the shell in the first place. The second big block is the vendor of the asset. It will end up owning around 65% of the company post-dilution. And then the last block is the people that have put in money in the latest raise. We raised £1.4 million, and that's all institutions, high net worths, and some retail investors. And those are the three, I guess, broad blocks of shareholders in the company.
Interesting. So Consolidated Growth Holdings have sold, but they haven't sold. They've still got a 65% holding. That's interesting.
Yes, they haven't taken any cash, so they've sold all for shares, and their shares are locked up for 1 year. But we've obviously had lots of discussions with the company over the course of the last 2 years, and they're long-term shareholders. They see huge growth within the asset in the region.
And the reason for Contango, you guys can have better access to funds, do you think?
Yeah, we're also more focused. Consolidated Growth Holdings had a range of exploration assets across Africa. None of them were at the mining license phase, and we are very focused as a company on near cash flow assets. We're not looking at drilling holes and proving up potential resources on a greenfield scale. We're looking at assets that have a mining license and construction can start immediately, or assets that have brownfield expansion capability further down the line.
Okay. So what kind of surveys have already been undertaken at Lubu, and perhaps you could put that asset, the coal asset, the Zim coal asset into context for us.
Yeah, the Lubu coal asset is a fantastic asset. It's one of the biggest coal assets in Southern Africa. It's largely a coking coal asset, and I'm sure we'll be talking about coking versus thermal at some point. It's a billion tons of resource, but there's also, if you look at the larger resource, it's about 2.2 billion tons, including all the categories of the resource statement. So it's an asset that won't be exploited fully, certainly within my lifetime, most shareholders' lifetimes, I'd say. It's got, as I said, a full 20-year mining license. We've also split the larger deposit into smaller blocks. We've identified the first block that we're going to start mining on, which is a 15 million ton deposit of high-grade coking coal at surface, going down to about 47 meters. And that coal we've done in the last 9 months, we've done a lot of detailed core work, taken that core, done washability testing, further testing around the quality of the coals, and sent that data to a range of off-takers that we are speaking to at the moment. And like I said, that coal, it's at surface. Mining is effectively clearing away a 1.5 meter overburden, and we are at the product already to start mining.
In Europe, people are no longer using coking coal and thermal coal for fuel. Southern Africa clearly is a different world. Could you summarize the market for coking coal and perhaps a little bit thermal in Southern Africa for us?
Yeah, so as you said, there's been a move away from thermal coal, certainly in Europe and North America, I guess the developed world. But there hasn't been a move away from coking coal. There's not yet a substitute for coking coal within the steelmaking, within the ferroalloys, within the smelting industry at large. So there's a very healthy market for coking coal, very healthy demand internationally for coking coal. And the supply has been somewhat affected because as people are shutting down thermal coal mines, because as you said, there's less demand for thermal coal, the coal mines where coking is a small byproduct have shut down everything, including the coking byproduct. And so we're seeing a very good supply-demand characteristic, certainly for the coking coal part of our deposit.
Let's take that 8 to 10 year horizon. Will the coking coal market be as healthy then as it is today?
The coking coal market certainly will be as healthy then as it is today, if not bigger, because until there's a technology change, the steel industry, the alloys and the smelting industry need coking coal and need coke, which is obviously the real end market that goes into the smelters. So those will be healthy. So
you're talking about signing offtake agreements. In fact, you were talking about signing offtake agreements, and then COVID came along. So where are you with the offtake agreements for coking coal? And off the back of that, could you give us a timetable for production?
Yes, so we've also said we won't start production until we have an offtake, because the whole negotiation of an offtake agreement is almost a game of chicken, where you don't want to build the mine too quickly because then the offtakers know you have to sell to them, and the same token, we know the offtakers need the product. So one of the big steps for us in, I guess, showing strength in the negotiation was the readmission to the market. That is a big, that was a big catalyst we were waiting for, to show funds, to show ability to raise further funds, etc. Obviously, COVID, we were in very advanced discussions earlier in the year, but then COVID hit, and it's out of our control when COVID in Southern Africa, when the restrictions are lifted. We're guessing in the next month, the restrictions will be lifted for us to even be allowed to fly back in. And after that point, I'm guessing there's a 2-month period of negotiations again before we sign offtake agreements. And the mobilization of the equipment and the construction of the mine should take no longer than 6 months from there.
Okay, so that takes us, I think, very neatly. We should talk about COVID and how it's impacted Zimbabwe and how it's impacted South Africa.
Yeah.
Has it been hit badly by COVID?
It hasn't been hit badly, but the economy's been hit badly because the lockdown was more draconian than even the UK. So army on the streets, real full lockdown, almost more reminiscent of the Spanish or the French lockdown, full lockdown. So we haven't been able, you can't fly in without a 14-day quarantine in a certain hotel, which makes business impossible for us to meet certain Chinese buyers of the coking coal for the various coke batteries that are Chinese owned in Zimbabwe. And for us to do discussions in South Africa, at least, with off-takers has been difficult. But I think South Africa is rapidly moving down there. They've got a similar traffic light system or numbered system of worry, and they're moving rapidly down that. I think probably end of July and August is when we should expect resumption of activities in Zimbabwe.
Okay. Political and economic risk in Zimbabwe. It's a fantastic country, well-educated people. It's had a very tough time in the last years. How much political risk, how much economic risk is there to doing business in Zimbabwe?
Well, political risk is obviously really dictated by the industry you're in Zimbabwe. So specifically, we know there's been a lot of historic political risk around ownership of farmlands, and there's been very little political risk in the mining industry. There was an indigenization legislation that was pulled out, or that was passed at some point. That's been revoked. That's been revoked for certain commodities. Actually, there's still 1 or 2 commodities that are covered by that legislation, but coal is not one of those commodities. So at least we don't fall under any indigenization rules. the country, for what that's worth, the country is very, very positive when we're there. So we've had lots of support from the mining ministry, and that was shown by the fact that they turned the license from exploration into a mining license. And even at this point, we are getting lots of support from the government there, wanting us to move forward with construction of this project, because obviously it's a key vote winner for them that economic activities seem to come to the country. I mean, as a company, we don't get involved in supporting one politician or one political party. That's not a great sustainable way of doing business anyway. But what encourages me is that we've never really seen any mining licenses taken in Zimbabwe. We've never seen any fatal issues to business in Zimbabwe. That being said, the currency is very difficult to deal with, which is why we're concentrating so much on the export market.
The Zim dollar?
Well, we will look at some Zim sales in order to generate some currency for local expenses and that, but the vast majority of what we're looking to do is export coal to the region and generate dollars offshore, which then are easily remittable back to them.
And do they pay in dollars? Will your offtake agreeers pay in dollars? Your clients pay in dollars?
The whole region pays in dollars, including Zimbabwe. You just can't move the dollars out of Zimbabwe.
Okay. You're fully funded to production, I understand. So how much more capex beyond that will you need, or is that it? And when do you actually expect Lubu to be profitable?
So we're fully funded to our first offtake agreement. Then obviously we can look at further expansions to the mine if we have very large profitable offtake agreements. But as a company, the philosophy of us is to get to production, get cash flow, and declare a dividend as soon as possible. And
why are you declaring a dividend for your shareholders?
For
big shareholders? Because for a smaller company, it seems like an unusual thing to prioritize.
Well, for all shareholders, obviously, we just declare a dividend in proportion to your rights. But it is an unusual thing to prioritize. But that's it's why the philosophy of the firm has been to go after near-term cash flow opportunities, to look for.
Get money in, but then actually distribute it back to the shareholders quite quickly.
To keep the board aligned with shareholders. I mean, as a board, we'll have a compensation that's, I would say, less than anyone else in the entire stock market. The entire board, including all non-execs and executives, is on £96,000 a year combined. And so the board is incentivized through share performance and obviously return of cash via dividend to shareholders. That also keeps everyone as motivated on return cash flow as possible, rather than building an empire of smaller opportunities.
Okay, Carl, my final question. What kind of news flow can we expect by the end of the year, by end of Q4?
So in the coming weeks, we will see appointments of new directors, some more executives onto the board. We'll see updates in terms of the discussion of the off-takers. I'll give some updates in terms of construction on the ground in Zimbabwe. Over the course of the next few months, we will see obviously announcements on the finalization of the offtake agreements. We might see some acquisitions if we can find some other short-term cash flow opportunities, and commencement of the works, the construction of the plant, and that'll come with a detailed presentation around the cash flow return expected on the money we've spent.
Carl Esprey, we're out of time. Thank you very much indeed for joining us today. For more interviews like this one, please subscribe to the London South East YouTube channel. And my final thought, thank you very much indeed for watching, and do stay safe.